Hi everybody, this is Seth Martin and welcome to this week's Middle Class Investor. Thank you everybody for coming in today. It's Friday and we've had now 1, 2, 3, 4, 5 really strong up weeks in the market. Well, this week wasn't as strong as the past 4 weeks, but you can see especially this week, the market really slowing down. And it's interesting how we can observe that it's slowing down right here at this line that we have. And I'll back up and we can look at this line, see what it is. It's this line here that connects these lows over the past year as the market kind of grinded its way upward here to this resistance area. And so, this could be an area where the market's going to get tired and potentially start moving the other direction. We might get, a little bit more action kind of in this area. It might take another week or so before the market tends to roll back over. So we'll just have to keep an eye on it and see how things look. And one of the things I want to point out is let's look at a daily chart real quick and zoom in here. And what you'll see is a fairly bearish signal here, kind of short-term bearish signal. Although the high week or the high day was today. Normally what you would do is you would wait for a high day and then look for a close below the low of the high day. So in other words, something like this. So if we get something like this, that's usually signaling the end of a downtrend. Now it doesn't have to be that way. As you can see right here, we had a high day right here. This day right here was high. And then we had a close below this high day. And of course the market reversed and went back up. But a lot of times this is a good, and of course the same thing happened here in this little pullback. But a lot of times when the market's at resistance, this is a good time to start, bringing in some of your longs and taking a little money off the table, because you don't know how the pullback could just be 2 days like this, and then it could rally back up. Or it could be, something that looks, more like this, with a little up like this and then a big like that. So you never really know when something's going to pull back, how deep a pullback. Now, given that we're talking about 401ks and stuff like that, you really wouldn't look for a signal like that until you started getting it on the weekly chart. So in other words, we're really not interested in messing with our 401k too much until we get a signal that looks more, like this on a weekly basis. And then you can see that on a weekly basis, you don't get as many of these little false positives or false signals. You can see this one right here turned out to be a false signal, although that was a pretty deep pullback. This was the high week, and then here's a close below the low of this high week, but it pulled all the way back here, almost 100 points. So that's a pretty deep pullback. So, but anyway, you have to have some sort of system. We don't have to, but it's good to have some sort of methodology for taking money off the table or putting money at risk. And this is one of the ones I've used on a daily basis, is that high to low day methodology. All right, let's moving right along. Let's look at interest rates. Interest rates also had an up week, pretty strong week actually. We got before the let's see, last week closed at 2.083, and this week closed at 2.151. So this might be the long-awaited move where interest rates really start moving out. And if that's the case, then we're going to see interest rates probably move into an area off of this pivot right here. So we've got you can see here where we have this pivot up and then this pivot down, and then we got a new pivot here. And like I've said before, the market tends to move from pivot to pivot. So you're likely to see interest rates before the next pullback. And this is quite a move. I mean, this is a pretty big move. So you're likely to see interest rates move into this 2.35 area. Now, they could pull back first. I mean, it could we could get a little bit of a pullback, although these lows are still building here, and it's looking like there's more evidence for this trend to continue, in this direction for the next month or so, maybe month and a half even, to get up into this area before pulling back. So it looks like interest rates want to climb higher here. Of course, there's no way to know for sure. All you can do is enter, if you're long interest rates, you can kind of pick a place at where it looks like buyers have stepped in, and then go long interest rates. But to me, it looks like, especially if you look at there's kind of a consolidation here. See if I can draw it here. There's kind of on a smaller time frame, you would see some sort of consolidation here, and then we've broken out of this consolidation. So this is a fairly bullish looking pattern here, and you know how I feel about interest rates. So we'll say no more than that. Let's look at the euro US dollar. The euro, same kind of triangle pattern here. Just a much larger one. The euro has been in this consolidation pattern for a long time now. It's kind of had some excursions in and out of it, but clearly on a pretty big range day or range week, broke out of this pattern finally and came down. And I would say that you'll probably get some retest of this line, and then have interest rates roll over and go lower. The euro relative to the US dollar. Let's look real quick at volatility since we looked at the S&P 500. The interesting thing, volatility really didn't do much this week. It really didn't do much the last 2 weeks, even though the market was up, especially last week, the market was up quite a bit, and volatility just kind of sat there. Now, that is sort of unusual. You don't usually see that. And it looks like volatility is wanting to kind of stay right in this area. And I would look for a breakout, above this 15.5, 16 area. And then probably we'll see a new spike in volatility probably as we get a new sell-off in the market. So look for volatility. I would not be short volatility here. You definitely want to be long volatility. So if you're someone who trades volatility, I wouldn't bet on it going lower from here. The bet is really volatility higher from here. One of the big indexes I have is something called the Global Dow. And the reason I wanted to bring this up is because on a weekly basis for the Global Dow, you can see that we had a bearish candle, and it's inside the body of this big white candle here. And so this is potentially a bearish harami. So if you get a candle next week that breaks below the low of this candle here, since it's inside the body of this candle, this would be a bearish harami if we got this pattern next week, and that usually symbols or signals rather the end of a trend, whether it be an uptrend or a downtrend. So I thought that was a pretty important piece of information to mention this week, and something to keep an eye on. We'll revisit that next week and see what happens from there. In fact, let's just make this isn't a great looking candle, but let's just make a box like this to remind us that we were looking for a close below this low week here. And that way, when we look at it next week, we will have something on the chart in advance. The Russell and the NASDAQ were a little bit weaker in this last move up. In fact, look at the Russell here. Look at how the reason this is important is because a lot of times the small caps will lead the market. If the market's going to go higher, they'll lead. And you can see here that the highs were all right in here on the Russell, pretty tight range, and it looks just like the market's really struggling to go much higher than where it is here. And then you have this, these dojis, especially this doji here, a lot of indecision in the small caps, and you see a similar kind of effect in the NASDAQ. Well, not so much the NASDAQ composite, but in the NASDAQ 100, which is I can't remember the symbol for the NASDAQ 100 as I never look at it. Let's just look it up real quick. NASDAQ 100 NDX. So let's pull that up. Oh, so actually the NASDAQ 100 looks better. And that's because I guess I had that backwards. That's because some of the large cap NASDAQ stocks like Amazon and Apple and that part of the market's been very narrow. So there's just a handful of companies that are really performing well. But in your small caps, where you get a lot of leadership initially at the start of a new trend upward, you would expect to see the Russell 2000 lead that move up a little bit. We can look at Germany. I mean, a lot of these markets look the same. These look a little weaker than the U.S. market. Germany, we talked about breaking this trend line a while back, this blue trend line that we have on the chart. So it broke it pretty hard right here and really hasn't come anywhere close to getting back up there. So unlike the U.S. market, where the U.S. market has retraced quite a bit, Germany appears to be lagging. And same thing with Japan. Japan really is lagging as well, except there's a lot of money printing going on in Japan, so it's showing some strength. But again, you're starting to see this is a weekly chart, and so Japan was down for the week. So you might see Japan get up as high as this trend line. So let's say it pulls back like this maybe, and then it starts to reverse and come back and actually test that trend line. But probably, I mean, this move right here looks very strong and looks trend changing like. And so I would say, ultimately Japan is going to look more like this and take out all this. Probably end up somewhere down in this area. So, of course, that's just my opinion. There's nothing. I want to make sure that I'm always letting you know that these are my opinions. They don't necessarily have to come true. The UK, kind of the same except worse. We broke out of this pattern that was flanked by these trend lines here some time ago now. We've been talking about this for a while. Broke out, kind of retested, the underside of this pattern, and then immediately sold off. So now we're getting a little bounce, but I suspect that, again, the trend for the UK is in, and we can connect these lines. It looks like we're right at resistance. For the UK, you might get one more last gasp up and then down. So all these markets look weak. Internally, they're very weak. I mean, we could go through a bunch of charts, but I could show you, biotechs. If you look at the financials like Citibank, this isn't near the retracement that the overall market got. Much more weak looking. If you look at Goldman Sachs, it looks even worse. Goldman Sachs is usually leading all the time, but it barely got up into this area, whereas the overall market, if this were a picture of the S&P 500, you would see current pricing more up in this area right up here. So the financials are lagging the market, underperforming the market, and usually if the market doesn't have the financials on board, if they're not leading, the market's usually not going any higher. Plus you have like the IBB, which is I tell you what, let's look at a couple of biotechs. Biotechs led right up until recently, and you've got Biogen here. It's clearly trying to make a trend change here. Actually, it's already started making a trend change. I think Amgen was pretty strong. Yeah, Amgen's a little bit stronger. But the biotechs in general, there's a bunch of them that are just, horror shows. They're already down like 40-50%. So, and that sector was leading the market, believe it or not. So really what you have up is you have Amazon. Amazon looks really strong. You have Apple. Let me go to let me make this a 6 month. Let me make it a 3 month chart. So let's look at Amazon again on a 3 month chart. So it's very, very strong here. Let's look at Apple. Apple looks pretty good, although who knows? This might be the start of something, or it might just be a little breather before Apple continues higher. Google still looks strong, although choppy. I think Twitter had a good week finally this week. Well, it did, and then it pulled back later in the week. Let's see, Facebook. So, these are really some of the only stocks that are doing well in the market. You can look at like, and the other stocks that are doing well are Dow stocks. So like, AT&T. There seems to be money going into some Dow stocks. If you look at just, let's just look at the Dow. The Dow looks really, out of all the indices, the Dow Jones Industrial Average really looks the strongest. If you look at, let's look at the weekly. This is also a sign, sometimes when the market gets thin, money will start to flow into some of these bigger cap names because they're more liquid and guys can trade in and out of them easier. So a lot of money will flow into these stocks when the market gets weak internally. So money will rotate out of stocks that have a little bit, what they call higher beta, and they'll rotate into lower beta names just so that if they need to get out of them, or if they need to move into bonds or something, they can sell quickly, and they're very liquid in deep markets. So that's also characteristic of market that's trying to top. So I'm still leaning towards, we've got a top happening here, mainly because this was such a huge, in just pretty short order, really within 3 or 4 days, you had the market down, 1,000 points on the Dow, 1,500 points. It's very unusual for that to happen without that signaling some larger move that's imminent and upon us. So I think there's still a lot of room for caution here. You could be proactive and move some of your 401k into cash if you wanted. That's what I did. But, you could also wait for confirmation and see what happens. The problem is, so I've said this before, but anytime you wait for more confirmation, you're taking on more risk. So, for example, let's just say I wanted to be long this market. Okay, so let's see, can I show you this? Can I show you what I want to show you? Let me pull this over like this. So we're looking at the far right edge, okay? And we're going to say, well, I want to be long. Whoops. I've got this area of support down here that I identified, this blue box down here. And so I'm waiting for the market to pull back into that box. Boom, it pulls back into the box. But I'm nervous, right? Because that was a very violent day, and this is just some of the psychology that goes on with market. So I wait for more confirmation. Okay, well, that's good. It pulled back a little bit, so maybe that's better for me now. I'm closer to the blue box. Why don't I go ahead and buy now? Yeah, that still doesn't look good. I'm still not feeling warm and fuzzy. Even though it went to the blue box, I'm not so sure. I just can't make a decision at this point. Well, that's looking a little bit better, but oh man, we pulled back again, and then boom, it starts taking off. Okay, yeah, I still don't feel comfortable. I feel comfortable now. Well, now look how high the market is. It's all the way up here, from down here. So just understand that the longer you wait, anywhere in here would have been a good place to get in. But if you're waiting for more confirmation, let's say you wait till there, well, now your risk is this distance right here, okay? Because where are you going to decide you're going to be wrong? Well, you can't decide to be wrong until you get down below here. So this is all risk now. So the longer you wait to get engaged with the trend, the more risk you take. Let's say you waited till here. Well, now your risk is from here all the way down to here. So just be aware, the way I like to think about it, and I don't know if this makes sense for you guys or not, but the way I like to think about it is what's more likely at this point? We had this huge kind of big topping process. So let me just kind of draw this. Okay, so then this took months and months and months and months. See how this just topped, this big rounding top? So there's a lot of sellers in this area right here above this red line. Really, even you could say even more so just in this area right here. A lot of sellers just lined up ready to get rid of their stock if you're going to buy, if you're willing to buy. So given that this topping pattern took so long, and now we've got what looks like a really strong rally. What's more likely at this point for the market to, rally here to new highs, or is it more likely that it's going to run headlong into this resistance and roll over? And that may be difficult for some of you to answer because you are not believers in technical analysis. You don't, for whatever reason, don't understand, don't subscribe to technical analysis. But my experience has told me when you have this much price action over such a long period of time, this little trend right here is not likely to get much further into this. there's a tremendous amount of resistance. Really, we're already kind of into it, but we're really right into the meat of it right now. We're right into the midpoint of this resistance. So if we were to draw like a channel here, just from the very top right here to the very bottom of this resistance area right here, look where the midline is. We're right at the midpoint of all this, back and forth, buying and selling, buying and selling, buying and selling. And this is what I mean by resistance. We're right in the middle of this resistance area, and it's really likely at this point. I mean, it doesn't mean we couldn't make another little high, but it's not likely to move up to significant new highs. It's more likely to chop sideways and then slowly roll over, maybe even roll over and accelerate downward. So that's the way you got to think about the market. You got to learn how to think in terms of probabilities. And it's difficult for most people because most people don't think in terms of probabilities. They think in terms of certainties or, really certainty. It's got to do this or it's got to do that. It doesn't really have to do anything. But given that all this choppiness started back in a whole year ago, well, almost a year ago, and spent all of last year, the end of last year and most of all this year chopping around sideways, it's not likely for this price action to go much higher than it is right now. And we're already starting to see that with this doji, and if you look on the daily chart, I talked about how this is a little bit of a bearish signal here. Now, again, it could pull back and then make a slightly new high, but look how narrow. I mean, it's just not. At this point, if you start drawing some lines on here, well, let me do it this way. Let's draw a line from here up, and then from here. You can kind of see we got a little bit of a rising wedge. So, if next week we get a bar like this, we're outside the wedge. And this whole little pattern is likely to reverse back to here and probably back into this area at least. So just be cautious. And again, that's a lot of risk. You're giving a lot of money back that you made right here. So just be cautious. Don't get greedy, and look for the signs. All right, so let's look at the dollar, the DX. We've had some of these same lines on here forever. Dollar finally, kind of took out some of these areas we've been looking at. Last week we had a big candle in the dollar. I had a really fast show last week because I don't even remember why, but I just went really fast and we didn't actually look at the dollar last week. But you can see we had a really big candle here, and then we got the MACD. Looks like it's wanting to turn up. So, just look at this. The MACD spent from April of this year till now just kind of in decline while we chop sideways here. If it starts to turn up and come back, it's probably not going to continue to chop sideways. It'll probably rally and take off. So look for the dollar to move higher here in the next, within the next couple of months or so, and the euro to move lower. We looked at the euro earlier. Euro is likely to move lower. Means the dollar is likely to move higher. We could look at gold. Gold's acting really weird. It's actually lagging silver, but we had a big sell-off this week in gold, and this is exactly what I was talking about. I was talking to you about a bearish harami, and you actually have that pattern right here, except it's complete now. So we've got a candle here, and then you got the body of this candle is inside this candle. Can everybody see that? If I draw a line, well, I didn't draw it exactly in the right spot, but I think you can see what I'm talking about. The body, still didn't draw it in the right spot, but see, this candle's bounded by these lines, and this candle is inside the body of this candle here. And then what do we have? We've got a break below the low of this candle. This is known as a bearish harami, and this usually shows the end of a trend. So the trend in this case is only from here to here. So we're not talking about like some mega trend here that's terminating. We're just showing that, this little uptrend in gold is likely over for now. The interesting thing is silver doesn't look as bad. It still looks, still a sell-off there in silver, but you don't see the... Well, actually you do. There's actually a bearish harami in here. Same kind of pattern. This bar is inside of this bar, and then you had a close below this low. So that's also a bearish harami. So both of those markets look tired, and sorry about that. I keep doing can't get this thing to... There we go. Okay. So both of these markets look tired, and I wouldn't expect them to do a whole lot here. They're at least going to pull back before going higher. But silver has been stronger than gold, and silver usually goes down faster than gold, and it usually goes back up because it also has some industrial value. Let's look at oil. Speaking of industrial value, we've kind of talked about this before, but oil, we're likely to see oil kind of make its way up, to this area up here. And then we'll have to wait and see what happens. But, oil could pull back from there a little bit and then go higher. But it's likely, given this huge move down, it's likely to roll over and continue lower. So we'll just have to see. But it looks like for the next year, probably, we're going to have oil moving up into this area here. So if your job depends on oil, you're likely to be doing a little bit better in the next 6 to 12 months as oil prices make their way back up into the $70 area. Let's look at... Well, this is the FTSE. You can see the FTSE looks pretty well. This is a 10-minute chart. Let me get on let's get on a daily. See what the FTSE did today. Yeah, so the FTSE, we got a little sell signal here, came down, rallied up a little bit, but the FTSE is likely going to something below this pivot point here. So down into this area. So if you're looking at the UK or you're trading the FTSE or indexing the FTSE, you might look for the FTSE to come down into this area below 5,700. Let's look at the DAX. DAX looks pretty weak as well, but I would look for the DAX. Well, it's actually in a very tricky spot right now. It could go lower or higher, but what we could do is we could put on some decision points on some pivots, if I can get those to come up. So we would have one here, let's say right in this area, and then we would have another one off of this DP buy signal pivot. If I can get on the right, if I can get on the pivot, okay, right in here. Now I can't get the... I don't know why that happens sometimes. There we go. Can't get exactly on the box there, but oh shoot. I'm sorry. This is also on a 3-minute chart. I'm looking at 3-minute charts, and so yeah. So the FTSE, the DAX, is in a pretty good downtrend. Looks like it tried to rally this week, but still hasn't gotten above this line. And I would say odds are that the DAX is probably going to start making its way, back down this way. So it's really not looking all that great for Europe or for the United States. So we'll just have to wait and see how these play out. If you look at let's look at the ES, which is the S&P 500 on a daily. And I can't remember why I drew this line here, but it's odd how the market's just kind of stalled out on that line. Now, there's one of the things that I've noticed about this MT Predictor software. It's usually pretty reliable. You can see this little gray line that's kind of underneath these little histograms, and that's what Steve calls his strength indicator. And the thing about the strength indicator is a lot of times what will happen is you'll get when the market's at a place for resistance, like it is right now, you'll get a pretty sharp move down, and then you could get another slightly higher high. And the reason, I don't know the reason, I don't know why that happens, but what I've noticed on the strength indicator is you need this sharp move down to get the strength indicator to pull down below the gray line, and then it'll make one more test, but kind of a negative divergence. And I'm not going to draw it here. Well, I can draw it, but let's say you have a sharp decline. Well, then it gets these bars kind of going the other way, and the strength indicator is like this, and then it comes back and actually makes a higher high on the index, and then rolls over. So we could see something like that. That's pretty common when I see the strength indicator the way it is. This is a good example right here. You can see we came down, and it would be, this is not the greatest example right here because the market actually came down lower in the aftermarket, and a lot of that price action doesn't show up here. But in this case, we came down, we're below the strength indicator, rallied hard the other way, which pulled the strength indicator hard back to the upside. But then notice it came back and tested, in this case, a higher low. And then the strength indicator pulled back down but stayed inside the gray band. So that's all I'm saying is we could get a pretty abrupt move, let's say next week, then actually make either a slightly lower low or a slightly higher high, and then sell off. So look for that to, happen. If we do get a sell-off that's sustained, it may happen later in the week rather than earlier, which will give you some time to make some adjustments if you need to. Let's see. I think that's really about it. I don't really have anything else that I want to go into. I just I want to just raise a general caution. I know I've been cautioning for a while, but the patterns that the market is making these are huge patterns, and it's taking a long time for things to happen, which tells me that the moves are going to be very, very large, and they're not going to be the kind of moves that you're going to be able to have a lot of time to deal with. I mean, you're going to see drops like these, where by the time you hear about it on the news, you've already lost a bunch of money in your 401k. So I just think there needs to be a significant amount of caution at this point, and you shouldn't get too greedy with trying to make an extra 1 or 2 or even 3% at this point in the game. There's just a ton of risk in these markets, and I hate to see any of you lose a bunch of money here. So anyway, that's really it for the week. Here's the YouTube channel. You guys, I don't know if you know how to do this, but you just go up here and hit copy. And then once you copy it, let's say you had an email or something, you can paste it into an email and email it to your friends so they can get this page. And let's make sure that none of our friends and family members lose a lot of money in this bear market that's upon us. All right, everybody. Thanks a lot for coming in this week, and look forward to seeing you all next week. Take care and have a happy Halloween. Be safe and have a lot of fun. Take care, everybody. Bye-bye.